Yeah, I'm losing my
First
edge.
time trading futures, we've got a story to tell for you. This is something that I had the pleasure of helping one of our fans out this week, someone who I would now call a friend, Mike. He was emailing me all week about small exchange futures and asking questions about how futures work and multipliers and specifications and all this different stuff. And this is how it goes. And this is what I love about this job is the whole time he's super nice. And by the way, as a side note, if you're going to email me with questions and stuff, if you're nice about it, I'm going to answer everything for you. But if you're not, I'm probably not going to answer it. Well, I will, but maybe not as fast. But he's super nice about it. And he was like, I feel like I'm asking you all these dumb questions. First of all the questions were great. And most of the people who have questions, they're great questions. And I gained a ton of insight because, we jump on here and I feel like we go so far afield with trading futures that, all of his questions really taught me about what we should be doing here. And I think it's a good time to take a step back, Mikey, and just walk through the process of your first time trading like I did with Mike. He ended up having a really positive experience. We hope he continues to trade the small exchange futures. But, we get so far bogged down with like these specifications and notional values and pairs trades and everything else that we skipped over some of the easy stuff. How was your first experience trading futures? Do you remember?
Yes, it was trading. Actually, I started trading futures late. It was with the micros, and I just jumped in real quick and I watched the P&L kind of swing around because they're decently sized contracts. I just kind of watched it a little bit in the active trader and Tastyworks, and I closed it just a little bit later. I think I took a few bucks out of it, but then I was kind of hooked because once I had learned a little bit of the tick sizes in the futures, it's just so much faster, so much more fun.
Yeah, it is a lot of fun, and hopefully people do feel that same way. But the first experience has to be, a low risk one. I like you went to the micros. I would even advocate for getting even smaller.
Yes.
And there are some things, because this is a derivatives market, similar to options, that we gloss over sometimes how kind of simple it is relative to options. So that second step, choosing buy or sell, to you and me, Mikey, seems really simple. And to the futures pro seems really simple. But I want to get into that as well. And then that third step that you already highlighted, which is like, oh yeah, I took a couple dollars out of it after watching it move. I think that's a great way to do it. A big part of the content that we produce here is like driving activity. You learn through the stuff that we produce, but also through like actually doing the thing. It's not like we would never be like, oh, you want to learn how to trade futures? And this guy emails me earlier in the week. I would never be like, oh, read this book. Like that. That's not what we're about here. So hopefully you'll feel comfortable by the end of the segment here with your first time trying out futures. And the conversation, like I've posed here, it really becomes like, how can I try this thing out without risking a bunch of money? And that step one is finding a market that fits you. It's not as easy as being like, oh, well, crude oil, I've heard about it and I know it, so I'm just going to go trade CL options, or S&P 500. Oh, I know what that is, so I'm just going to go trade ES. Because Mikey, if you don't choose the right product, your whole first experience can be completely screwed from the outset, because the worst thing you can do is get too big. I mean, look at this, just the first 2.5 months of action here in S&P futures, $20,000 in movement. And this is, as we saw yesterday, on volatile days, thousands of dollars. You would not have had as fun a time on your first time trading if you went straight to ES.
Yeah, and I have a feeling that a lot of people who had tried futures in the past did something like this and were just uncomfortable, whether you took the big loss or you kind of foresaw that it could happen, and then you turned away from an asset class that really should be embraced by many more people. It's one of the draws to options, is that you can define your risk. Like when I was learning how to trade options, I didn't start with selling puts. I started probably with buying puts and calls because I knew my risk was so defined, and then eventually moved on to spreads and then more of those short premium strategies. But if you jumped into something like shorting the ES futures or just buying them with crude or anything, and it moves thousands of dollars against you, it's a pretty big deterrent from coming back to the hot stove.
And I think that that's where a lot of the negative connotation got into the futures system, which are, people were like, oh, it's leverage and it's too risky and all this stuff. And there is leverage, and that's part of, honestly, the what we think is one of the big reasons to try out futures. But the negative piece came in was the leverage and the size, where people were like, oh, I can't trade futures. That market's too crazy. Whereas, we provide a market like this, the S2Y, which is where I sent Mike for his first trade. And you have leverage. Like, this is a $200 product that is only requiring about 20% of that in capital requirements, but it doesn't have that big size piece. It's leverage and efficiency with something that moves on average about $20 per day. You can see here the swings for the same time frame where S&P 500 futures are moving tens of thousands. This thing hasn't moved $100 in the first few months of the year here. And this is something that, with this viewer that I keep going back to, he was like, hey, I made $20 on this. And then the problem that he posed was, which is like the best one to have, which is like, oh, I wish it was a bigger trade. And I was like, first of all, slow down, don't go too fast. But that's the best problem to have, right? Is that like, oh, it was too small as opposed to being too big.
Yeah, well, it's funny if it had gone the other way too. It's like, oh, I wish it was smaller. So it worked out quite nicely for Mike. And the other thing too is how much that costs. To get $20 out of this trade, the margin is $60. That's a fantastic return on capital. It's the only return on capital you can kind of realize with futures, but you can probably get something similar with options. But with the feel and the size of stocks or ETFs, it's incredible. It's great.
Yeah, and it's funny because I wrote for a bunch of the options shows at Tasty Trade, and whenever it was like a matter of, okay, new person entering options for the first time, you always say defined risk strategy, that's a tight spread as small as it gets. And this is as close as we get in futures to that options world, which is like, it's a $150 product. It moves on average about $20 on an outlier day, maybe $30, $40 per day. That way, you're not overextending yourself with too much risk. This is as close as it gets to defined risk and options with futures here. And then it becomes like, just try the thing out. If you don't have necessarily an opinion on rates or short-term rates at that with the small 2-year, then I would just be like, just look at buying it or look at selling it, see how it feels. Just like you said with micros, Mikey, watching your P&L move, watching the market move, in that, even if you're only there for 10 minutes in that trade, not even 5 minutes, and I think viewer Mike was in there for like 24 hours, maybe a little less than that, whatever time frame it is, that teaches you so much more than any book or anything else. It's just buying, selling it, and also something that I overlooked was like calls and puts and all of that stuff that a lot of these people, a lot of retail people in the last several years have come on board with and learned. They often think that futures are super confusing, but it's actually just the scenario of like, do you think that the 2-year yield is going to go higher? Then you buy it. Do you think that the interest rate here in the 2 years is going to go lower? Then you sell it. And then from there, it's watching it, right, Mikey? Like, maybe you can expand on what you learned just watching that micro ES future.
Yeah, it's exactly how I structured the trade, actually. I was like, all right, I'm going to make my first futures trade. I understand the contract specs and what the tick values mean, so I'm not getting in over my head. And I just looked at a short-term basis, and I thought, okay, this is a little oversold. And I decided I bought one contract. I held it for a little. It fluctuated up and down. I was maybe up 50, down 50. I ended up closing it. I think I made like $30 or $50 on it. But very short-term basis. It wasn't a huge position where I was forming some global macro view of all my funds are in this. Everything is on the line. It was just let me dip my toe in the water and get a feel for the liquidity in those products, which at the time was great. And now it's excellent across the board for small exchange products. And see how the orders get filled and hopefully make a little money on it. And Frank, you bring up such a great point too, which is with options, we've taken all this time. And I remember sitting in the library in my university, soaking up every book I could possibly find on options. What are puts, what are calls, what is buying, what is selling. What is implied volatility? What is this time decay? There was a lot of learning that went involved with determining a trade for in options. With futures, because we've simplified the specs and the tick sizes and the multipliers and the expiration, this is literally just like buying or selling a stock. It couldn't be easier. So I think a lot of the frustration and the intimidation of futures we've kind of pared away with the size and with the standardization, which is great. If you're trading options now, futures will be much simpler for you, I think.
Yeah, I always feel like kind of like bad, or like that people are going to feel almost like, oh, this isn't as crazy as I thought, and it's thus not as fun. Like, it's a lot of fun, but yeah, it is not nearly as crazy as you think it's going to be, where it's just like, okay, it's a derivatives product, and I got to learn all this stuff, and the term structure and futures and
Cost to carry and all that. Yeah.
Forward curve, cost to carry, all this stuff. And then it's like, yeah, do you think that crude oil is going to go higher? Then you buy the crude oil future. Like, it's really as simple as that. And then the last piece, but what we always contend is the most important piece, is management at comfortable levels and also reasonable levels. Another question that he was like, oh, so should I wait for like $100 or $200 per contract? And I was like, this is a product that hasn't moved $100 this year. I don't think it's reasonable to wait for $100 in the next, couple of hours. But then also, especially with this first experience, Mikey had a positive first experience in terms of his P&L. Viewer Mike had a positive experience in terms of his P&L. Of course, it's not going to go that way for everyone. We know that none of these trades are 100% trades. Of course, they're not. They all have risk. But what's really nice, especially with this small 2-year future, is just say to yourself going into it, all right, it's my first time. I'm going to look to make $5 or lose $5 or $10 or $20. And what's great is if it goes against you, you bought it and it moved down by, 10 cents or 20 cents, $10 or $20 with the small exchange futures, then you just get out and it's like, oh, it's just $10 or $20, as opposed to a lot of these other traditional futures markets, and where people get bitten and then they don't come back to futures, is that first experience goes against them and they're out before they know it, $500, $1,000. And they're like, this sucks. I don't want to be any part of this. And so make sure that you choose a small product, that you choose whether or not you want to, whether you're bullish or bearish. It's as simple as buying or selling. But then also very essential to that first experience in futures is just watch it move and make sure that you're getting out at comfortable levels. I'm just going to risk, $10 or $20. And that way, if it goes against me, I'm not going to have this negative experience because I chose too big of a product and it went against me thousands of dollars. And that hopefully will build to a great first time trading futures.